feel about the prospects of this deal getting done anytime soon?
Well, happy Friday. Thanks for having me. And the Twitter deal certainly has been extremely volatile ever since it got announced. If it wasn't one thing, it was another. First, you had all the drama with the lawsuit, and that seems to be calming down. And then there's the financing and Tesla stock. And now there's noise with respect to CFIUS, the Committee on Foreign Investment in the United States. And note that government agency, it regulates foreign investment. And I will note that Elon Musk is not a foreign investor. So I fail to see how that would be applicable to this deal in particular. And should note that also the Twitter deal is not subject to CFIUS approval. As the company stated, all conditions have been satisfied.
Yep.
And is expected to close October the 28th. And currently the market price, again, roughly a 90% chance. If you look, a deal price 54.20, trading around 49 and change, 50 and change. So you got roughly 4 up and say $30 down. That is 10% chance of deal break. So the market still quite skeptical on what's going to happen here.
Yeah, what do you think, Julian? What should the price be?
Well, the price should be volatile. I think the stock trading down on this CFIUS rumor is a bit overdone. My view is that this deal will close October 28th, but that's to be seen. So I think it's a good opportunity.
It's interesting because, to your point, the more the stock trades down, if it does close, it's a nice profit opportunity. When you look at merger arbs this year, they're one of the few types of strategies, according to Bloomberg indices, that are up on the year. So where's the opportunity and where are the pain points?
Yeah, that's a really good point because merger arbitrage is a low duration, absolute return strategy that theoretically should not be affected by the equity bear market or the bond bear market. And for an arbitrage, if you can generate a 10% return in a week, that is exceptional, especially in the fourth quarter heading into year end, where you do want to show that positive performance for your investors.
Julian, do you think, though, that we are going to see more regulatory scrutiny? And is that going to make it harder to judge whether or not some of these deals ultimately will close?
Yeah, that's a great point. Specifically on the antitrust front, you've seen a lot of noise from the FTC and the DOJ, and those regulatory agencies getting quite aggressive in suing to block deals. In the past month, we saw the DOJ lose 3 merger challenges, so it hasn't gone well with respect to being more aggressive in terms of challenging mergers. Nonetheless, you look at some of these deal spreads, Albertsons, Kroger, for example, and it's so wide you could drive a truck through it. So merger arbitrageurs in particular, and the market in general, is very, very concerned just regarding antitrust noise. But I think that's all it is noise. And a lot of these deals where the spreads are very wide, I think they will close on the terms as expected.